Hello, hello, hello. This is Richard, the financial advocate, and today we're going to talk about correctly filling out our W4. It's very important we fill this document out because it affects our lives daily, and I really want to help you out. So let's jump right into this brief presentation on correctly filling out your W4. The W4 is a very important document to our lives financially. USA Today and many other news publications have featured articles on the W4 and employee tax withholding. A major point in the articles is millions of employees allow the IRS to hold too much money from their paychecks throughout the year. The articles also make the point that the employees would be better off having less money withheld from their paycheck, which would increase their take-home pay. The employee could then use the extra take-home pay to increase investments to their retirement fund or pay off debt earlier. Adjusting or correcting the Form W4 is simple. In this training, you will be shown how to use the electronic withholding calculator on the IRS website. Simply read the form line by line and answer the questions according to your situation. You are encouraged by the IRS to use the withholding calculator to perform a quick paycheck checkup. This is even more important this year because of the recent changes in the tax laws of 2018. The W4 calculator helps you identify your tax withholding to make sure the right amount withheld from your paycheck. There are several reasons to check your withholding. Checking your withholding can help protect against having too little tax withheld and facing an unexpected tax bill or penalty at tax time next year. At the same time, with the average refund topping $3,000, you may prefer to have less tax withheld up front and receive more in your paycheck, which is what my econ highly, highly recommends. A disclaimer: my econ does not guarantee you will receive an increase in your check by adjusting your Form W4. Results will vary based on each individual's unique financial situation. See a qualified tax professional if you are unsure about the form. Family status. We're going to discuss the Johnson family. The Johnson family is a husband, wife, and two children. The husband earns $45,000 per year. The wife earns $55,000 per year. The children are ages 5 and 8. They pay $4,800 in child care. The IRS W4 Calculator. To get to the IRS W4 Calculator, go to Google and type W4 Calculator 2018. Look for a result that is titled 2018 Withholding Calculator, IRS, and click the link. General information. There are 5 pages to the W4 calculator. Answer each question correctly according to your specific situation. If you are unsure about a question, there are hyperlinks next to each question that explains that section of the form. The first question asks, what filing status will you use on your 2018 income tax return? And there are 5 choices available: single, married filing a joint return, married filing separate returns, head of household, qualifying widow or widower. If you think you may be qualified to file as head of household or qualifying widower, then click on the hyperlink next to those choices and a pop-up box will appear giving you the definition of each status. Select your status. In our example, the Johnson family selects married filing joint return. The second question asks, can someone else claim you as a dependent on his or her tax return? If you are unsure how to answer this question, click the dependent hyperlink and you will be provided with detailed instructions on when someone else can claim you as a dependent. Answer this question based on your situation. In our example, the Johnson family's answer is no. Click continue. The next question asks you to select the total number of jobs in which you and your spouse are currently or will be employed. Enter military retirement pay or taxable pensions as additional separate jobs. Enter the total number of jobs you and your spouse, if you have one, will be employed. In our example, the Johnson family selects 2. The next 4 series of questions ask if you or your spouse held a job this year but are no longer employed in that job. Contribute to a tax-deferred retirement plan, contribute to a cafeteria or other pre-tax plan, or received a scholarship or fellowship grant that must be included in gross income. If you are unsure about what is considered a tax-deferred retirement plan or what is considered a cafeteria or other pre-tax plan, click on the hyperlink for each and a pop-up box will appear giving you a detailed definition. If your situation qualifies for any of these 4 situations, click the checkbox for that question. In our example, neither of these situations apply to the Johnson family. They do not check any of the boxes. The next question asks you to select the number of dependents you will claim on your tax return. Enter the number of dependents you will claim on your tax return. In our example, the Johnsons have 2 young children that they will claim on their tax return. The Johnson family selects 2. The next sections asks if you or your spouse are 65 years of age or older or blind. Check the box if any of these situations apply to you. In our example, the Johnson family leave these boxes unchecked. Child independent care credit. The next question asks you to select the number of qualifying persons for this credit, which is the child independent care credit. If you have qualifying persons for which you pay child or dependent care for, enter the number of persons here. In our example, the Johnson family have 2 children in child care. They select 2 for qualifying persons. If you plan to claim this credit, enter an estimate of work-related child independent care expenses. Click the work-related child independent care expenses hyperlink if you are unsure what this category is. In our example, the Johnson family pays $4,800 per year in work-related independent care expenses. The Johnson family enters $4,800. Child tax credit. The question asks, select the number of qualifying children. Click the qualifying children hyperlink to determine what qualifying children is defined as. A child is your son or daughter, adopted child, grandchild, stepchild, or foster child who is under age 17 at the end of this year, a United States citizen or resident alien, holder of a Social Security number, issued before the return due date, and claimed as your dependent on your tax return. Based on this definition, enter the number of qualifying children you are claiming. In the example, the Johnson family has 2 children that meet this qualification. So the Johnson family enters 2. Earned income tax credit. The question asks you to select the number of qualifying children. Click on the qualifying children hyperlink to determine what qualifying children is defined as. This definition is not the same as the definition for qualifying children for the child tax credit. If you are unsure if you qualify for earned income tax credit, click the qualifying children hyperlink and follow the instructions to determine if you qualify. In the example, the Johnson family does not qualify for earned income tax credit because they exceed the income threshold to qualify. The Johnson family leave this box at 0. Other credits. The question asks you to enter the total value of other tax credits for which you expect to be eligible. Click the tax credits link for a definition of what other credits are. You may need to refer to the publication listed beside the other tax credits listed to get a full briefing. The Johnson family does not qualify for other credits. The Johnson family leaves the blocks blank. Click Continue. Income and withholding. For each job you now hold and for each taxable person you receive, the question asks you to enter the gross wages, salary, and tips you expect to receive in 2018. Use the amount of wages, salaries, and tips before any taxes, benefits, or other items are subtracted. Do not include bonuses. Enter military retirement or taxable pensions as separate jobs. In our example, the husband enters $45,000 in job 1, and the wife enters $55,000 in job 2 box. The question asks you to enter any bonuses you expect to receive in 2018. In the example, the Johnson family do not expect to receive a bonus this year. They leave the box blank. The question asks you to enter the federal income tax withheld to date in 2018, including amounts withheld from bonuses or which you expect to have withheld for bonuses. The Johnsons reviewed their last pay stub, and they both entered the total federal income tax that has been withheld to date in 2018. The husband enters $1,544 in the job one box, and the wife enters $1,880 in the job box. The question asks you to enter the federal income tax withheld from your last salary payment. The Johnsons reviewed their last pay stub again and look at how much federal income tax was withheld from their latest earning period. The husband enters $193 in the job one box, and the wife enters $235 in the job two box. The question asks you to select how frequently you are paid. In the example, the Johnsons both get paid every 2 weeks. They select every 2 weeks. The questions ask you to select the date closest to when you first held this job in 2018. In the example, both the husband and wife have been working since the first day of the year. The Johnsons select January 1st for both job 1 and job 2. The question asks you to select the date closest to when the job will end in 2018. In this example, both husband and wife expect to work until the last day of the year. The Johnsons select December 31st for both job 1 and job 2. Non-wage. I went too fast. Non-wage income. The question asks you to enter the total of any other taxable earned income you received or expect to receive in 2018. If you are unsure what other taxable earned income is, click the hyperlink to receive a full definition. In this example, the Johnsons do not have any other taxable earned income. They leave this box blank. The question asks you to enter any unemployment compensation you received or expect to receive in 2018. In the example, the Johnson family have not received or expect to receive any unemployment compensation. They leave this box blank. The question asks you to enter an estimate for any other non-wage income, such as dividends or interest received, you expect to receive in 2018. Do not include amounts you included in earned income above. In the example, the Johnson family does not expect to receive any other non-wage income. They leave this box blank. Adjustments. In this example, the Johnsons decide to start a home-based business with MyEcom. They estimate their adjustment to income to be $4,100, $4,150. The question asks you to enter an estimate of your 2018 adjustments to income, including deductible IRA contributions and education loan interest. The Johnson family enters $4,150. Information regarding determining an adjustment to income can be found in IRS Publication 505, page 8. Our example uses $4,150 as a very conservative number. A brand new networker that tracks and keeps business expense records will often have a Schedule C net loss at least $4,150 their first year in business. See IRS Publication 505, page 8 for all of the items a person could claim an adjustment to income on, and click continue. Deductions, my favorite part. If your standard deduction, $24,000, is more than your total itemized deductions, your standard deduction will be used to calculate your withholding. Otherwise, your total itemized deduction amount will be used. The question asks if you want to use your itemized deductions to calculate your withholding. Even if the amount is less than your standard deduction, check this box. In most cases, most people would take the standard deduction as it would be more than their itemized deduction that is calculated on a Schedule A. In this example, the Johnson family does not have itemized deductions greater than the standard deduction of $24,000, so they will not itemize. The Johnson family leave this section blank and click continue. Let's talk about results. The IRS calculator will provide you with your anticipated income tax for the year. This is the estimated amount that you will owe. The calculator also calculates the amount of taxes currently being withheld from your check and determines if you are overpaying in taxes or underpaying in taxes. The calculator will then provide you with the number of allowances recommended that you claim so that you do not have an overpayment or an underpayment for the year. Even with the recommended corrections, you may still get a refund, which the IRS calculator will report if that is the case. Print out this page and read each paragraph so that you understand the resulted outcome from the calculator. It may suggest that you repeat this calculation again in the new year to make sure the numbers stay the same. In this example, the Johnson family will owe $3,302 in taxes. At the amount of taxes being withheld from their checks, they will pay $10,272 in taxes. This is an overpayment of $6,970. To avoid overpaying in taxes, the calculator suggests that the husband redo his form W4 by claiming 9 allowances and the wife redo her form W4 by claiming 11 allowances. I want to stop right here and ask you right now, if you don't know, how many allowances are you claiming? Are you claiming 1 or 2? You really got to check this thing. Let's go on. We're almost to the end. Let me repeat that. To avoid overpaying in taxes, the calculator suggests that the husband redo his form W4 by claiming 9 allowances and the wife redo her form claiming 11 allowances. If they do this, the calculator suggests that the expected refund will now be $25. This action will put $6,945 back into their household. And who does not want that money in their household? So let's talk about strategy trumps sales. The Johnson family are like millions of other American families who are overpaying in taxes and who could recoup their overpayment and increase their monthly take-home pay by simply adjusting and correcting their Form W4. The new cash flow they have received from adjusting their Form W4 can be used to eliminate debt, invest, or improve lifestyle. If the Johnson family chooses to eliminate debt with this new cash flow, they could use the My Econ debt elimination tool and strategize their way to debt freedom and even more cash flow. If the Johnson family chooses to invest this new cash flow into a tax-deferred retirement account, they will experience another reduction in taxes and free up even more cash flow. Or the Johnson family may choose to use this money to enhance their lifestyle. The choice is up to the individual, but this cash flow strategy is one of My Econ's first financial steps to helping families all across America improve their financial lives by taking back their hard-earned money from the government and putting it to good use for themselves. If you have any questions about correcting your Form W4, contact me or your upline leader if you're in My Econ. Attend one of the many My Econ webinars, and go to a live meeting and ask questions and get those questions answered. Again, I want to thank you for joining me in this quick video about the W4. And I just want to encourage you to don't let $50 hold you back from gaining and reaping rewards really you can't even imagine. But I want to encourage you, go to that website, make sure your W4 is correct so you won't lose money next year. All right. Again, thank you and have a great night.